My mic is open. Can we hear now? I think it's working now because I see this dot thing at the bottom moving. Oh, wonderful. Because all I'm there to talk to myself. Okay. I don't know. I was trying to use a headphone. I guess the headphone is what is not working then. Let me try. Thank you for confirming. All right, let's see again. Still hearing? And are we hearing clearly? I have the headphones back in now. Yes, okay, perfect. Alrighty, wonderful. Hi everyone, my name is Whitney from Whitsuiter. Oh, you're gonna see this whole. I'm gonna turn off my camera because this quality is so weird. This quality is not good. But yes, these are my headphones. That's why you guys weren't hearing me. I'm trying to block out my background sounds. But hi, I'm Whitney from Whitsuiter, and I'll be doing an income statement question with you today. Turn this off because it's not cute. All right, let me go ahead and reshare my screen. And we can get back to the question. Perfect. So we're doing J. Graham income statement. This question has two requirements. It is asking for an income statement and a balance sheet. However, for this session, we'll only be doing the income statement. You can go ahead and drop any questions, concerns, comments in the chat, and I'll address them. Okay. So we have our trial balance here, which balances, so everything is fine. We have additional notes that we're going to look at before we even start to write up the statements. Always check for additional notes. Those are very important. I don't know how I can remove that hover thingy from the bottom of the screen where my camera should really be. I guess it's not optional, right? I don't know. I've never used YouTube Live before. So figure it out as we go along, guys. But anyways, let's first talk about our additional notes. We have prepaid expenses, insurance, which is $105, and rates, which is $405. No, yes, there needs to be an adjustment with prepaid expenses. So let me go over to my Excel. There are two things that we typically look at, two types of adjustments when it comes on to the expenses. We have prepaid expenses and expenses owed, right? So expenses owing are owed, or let's say accrued expenses, right? Accrued means I owe. Accrual is an owing. Or you may see expenses in arrears. You may see that as well, this word, arrears. No, don't let them trick you. In accounts, we typically have so many different ways of saying the same thing. So don't let that trick you. You may see a different terminology, but it means the same thing. So you may see accrued expense, expense accrued. You may see expense owing or expense owed, and you may see expenses in arrears. They all mean the same thing. Yeah. So if we have accrued expense, owing, and we have prepaid expense. Now let's quickly talk about what these are. Expenses owed. Self-explanatory. You have an expense that you incur the cost of something and you're supposed to pay, but you haven't paid. That's it. That's it. You owe somebody something. What do we do when we owe an expense? You need to record it because we have this accruals and matching concept in accounts. Those the foundation stuffs that we often overlook because it's so theoretical and so basic. It's very important. You have to know the foundations. This is why It's called principles of accounts. You have to know the principles and the concepts that govern accounts, but the accruals and matching concept. Now, this simply states that you need to record your expenses in the period in which they were incurred, regardless of whether payment was made for them. So if you go through the month of, which month are we in now? April. We're now in April. Rent is usually due on the 1st of every month, right? If your business rent is due April 1st, but today's April 6th and you still haven't paid your landlord, you owe the people them. It was due on the 1st of April. And you are on the property and you exist on the property and you operate on the property for the duration of April, it means that you incur that cost. You use up the people and services or the people and property. You incur the cost. You still haven't paid. The end of April coming, you still haven't paid. It means you owe them. When you're preparing your statements, your income statement specifically right now, you should not put that April rent in it. It should be in it because guess what? You used up the services. You incurred the expense. So it needs to be included. So we add expenses incurred that are owed at the end of the period. So any expense owed at the end of the period, you incur it, it's owed, you haven't paid it as yet, you need to add those. Add it to whatever is in the trial balance. If they give you as additional notes or as adjustments, it's because it's not included here as yet. So you need to add it. So let's find insurance, for example. Here we have insurance with 492, is it? Yeah. And they're saying that, oh, this one is prepaid. Let me see, expense owing is rent. Where is rent? Rent join with rates. Let me do a simpler one. Telephone charges. Telephone is 405. Expense owing for telephone is $85. In the trial balance, you realize that you have $405. It simply means that you need to add that $85 to the $405 when you're going to be preparing your income statement. Yeah? And prepaid expense is the opposite. You add expenses owing and you subtract expenses prepaid. Expenses prepaid simply means same concept we're talking about now, the accruals concept. The same concept. It simply means that if you prepay something, it means you pay in advance, right? You may see a payment in advance, prepayment, same thing. If you prepay, you pay it before it's due, right? So let's say for last year, 2025, you paid rent for January to December, but then you also paid rent for January 2026. Mind you, if you're preparing financials for 2025, why are we concerned with 2026? You get what I'm saying? So if it is prepaid, you pay it before, you pay it in advance. It's payment for an upcoming financial year. It's payment for a time that hasn't come as yet, or a time that you're not preparing statements for. Then you need to subtract it. You need to take it out. So this trial balance, again, the figure that you have here, prepaid insurance, right here, prepaid expense for insurance specifically, insurance in the trial balance is 492. The prepaid portion, which is 105, needs to be subtracted from that 492 when you're preparing your income statement. You pay something before it's time. It should not be in the 2025 financial statements because the January 2026 rent that we prepaid relates to the 2026 financial year. So you cannot and you should not put it in the 2025 income statement. For this one, we're doing 2018. So let me use the question. We're doing 2018, September 30, 2018. That's the year end. Anything from October 2018, because the year ends September, you know. So anything from October 2018 is a new financial year. And if you make a prepayment, if you pay something that relates to October 2018, that's in the new financial year. And if you're preparing the income statement for the year ended September 30, 2018, that means that if you prepay something for October 2018, it should have been a September 2018 statement. You understand? So you subtract prepaid expenses and you add any expenses owed. at the end of the accounting period. So prepaid expense, so insurance, what I usually suggest when you're working with your papers and you have pens and pencils in the exam, highlight or make an asterisk or something on the items that you will need to do some adjustments for. Because you know what usually happens to students? They forget to do the adjustments when they're preparing the statements. So since we're going through and realize prepaid expenses insurance, this 492 will need to be adjusted when we are preparing our income statement. I'm going to go ahead and highlight it so that I can remember that this will require an adjustment from me. Yeah? And you can go a step further. Put the adjustment in the bracket so you won't forget what it is. Go through before you start to map any statement and write outlines. Go through, because your exam is a pen and paper exam. And if you're rubbing out, not going to work. So it's best you go through the additional notes, map out the plan for the additional notes before you start to write up the statements. I know some of you may want to hurry up and go in the exam and write the statement, the format, because you don't want to forget it because you just swat it right before the exam. That's why you need to know it. I know it's a lot to remember. It's a standard format. And sometimes you may work at questions that have more things than the others. That's totally fine. You just need to know the principles. You can never go wrong with principles. So I don't teach you how to work a question. I teach you the principles of accounts. And once you learn the principles, you will be able to apply those principles to any questions that you get. That's the whole point. So if you have a prepaid expense, please, not revenue, expense, we're going to be subtracting it. The prepaid amount, that is. So for insurance, the adjustment that we will be making when we're preparing the income statement, we're going to do 492, which is what they give us in the trial balance, minus 105, which is the prepaid portion. And for rates, we're doing the same thing. Rates kind of sticky because rents and rates tie up to each other. So I'm just going to highlight it and see, put the full 2970 minus how much is prepaid in rates? 405. As I go along, you realize I'm highlighting so you guys can see where I'm picking up these figures from. So 405. All right, this is not finished yet because there's an adjustment for rent. No. There's something called double entry that governs the rule of accounts, right? Yeah, man. If you got the accounts, you have no double entry. It's not a question. No, doing double entry, it simply means that there's two accounts that is usually affected, or two sides to everything, because it's double entry. There's two sides to everything, literally. In the income statement, you realize that we're subtracting the prepaid expense in the income statement. Yeah? But in the balance sheet, something needs to happen in the balance sheet. So with prepaid expense, we subtract in the income statement. So I'm going to write IS for income statement. We subtract in the income statement. And as it pertains to the balance sheet, let's think about it. If you pay an expense before it is due, before it's time to pay, what does that make it? You pay something in advance. That's going to be an asset. It's a current asset in your balance sheet. Why? Well, because you paid something before it's due. So once the due date hasn't come as yet, at any point you can go back to the person who you paid and you're like, hey, give me back my money. And yes, you're supposed to get back your money because guess what? You were not due for payment as yet. You did not owe anything. It wasn't time for you to pay. You just had a little extra funds and you decided to pay early. That's it. So if you want to go back and get back your money and ask back for your money, by right, you should get back your money because it's still your money until it becomes due. So prepaid expenses, it's just you paying for something early. So it will still be your money by right until it becomes due. So anytime before it becomes due for payment, you can go back and ask back for your money and you're supposed to get back your money. So that's why it's going to be an asset. Specifically, it's a current asset. These don't usually last long. So in the balance sheet, your prepaid expenses are current assets. So it's two sides. Today, we're focusing on the income statement. However, knowledge, you can never go wrong with extra knowledge. So I'll tell you same way. Expenses owing. When we get to the balance sheet, we do the balance sheet portion, but we're not in balance sheet today. Expenses owing or expenses owed. We have rent, $300. Again, let's do the adjustments up here. Remember, we said expenses owing, we're going to add them back or add it. Because even though you haven't paid it as yet, you still need to record it as an expense in this period that it was incurred, whether or not you pay the people in. Once you use the services or once you incurred that cost for that period, you need to be recording it as an expense. So we're going to add the $300 for the rent. And for the telephone, we're going to add the $85. Let me just highlight telephone so we can remember that telephone comes with an adjustment. So 405 plus 85 for the telephone. And again, for owings in the income statement, we're going to add. And in the balance sheet, if you owe something, what's that called, guys? If you owe it, it's a liability. So expenses owed, the balance sheet side of it, that will be a current liability. Again, we're not doing the balance sheet side right now. All right, you have a stock here. Stock is the same thing as inventory. So sometimes you'll see inventory, sometimes you'll see stock. Do not confuse this stock with stocks as in shares when you're doing company accounts. Accounting for corporation, different story. We're not focusing on that right now. But in this context, stock is inventory. You realize you have two of them. You have stock here inside the trial balance. Look at the date. You have stock down here again, under or outside the trial balance. Look at the date. Sometimes students mix this up. The one that is outside here under the trial balance with a date of September 30, 2018 is going to be your closing stock. And the one that is inside your trial balance is going to be your opening stock. You can use the date as an indication here, September 30, 2017, which would have been the closing stock for last accounting year, which means it's the opening stock for this accounting year. Because when you close 2017 accounting year, you started the 2018 accounting year with this amount. And this amount here at note C is what you're closing 2018 with. Depreciation. Depreciate motor van and office equipment at the rate of 20% on original cost. What does this mean? You guys are used to seeing straight line method and so reducing balance method and such, right? This is just a play on little words again, different way of saying the same thing. If you're depreciating on the cost, it's a straight line method. And all you're doing here is to take 20% and multiply it by the cost of the asset. That is it. Oh, this is easy depreciation then, because it's just straight line, 20%. And it's both for motor van and office equipment. They didn't segregate, so it's the same for both of them. So motor van, office equipment. So motor van is going to be 20% of the cost of the motor van. Where do you find the cost of the motor van? You look in your trial balance and where you see the motor van, sometimes the question would say motor van at cost, which makes it obvious that's the cost. Other times it will not say that. You'll just see the name of the asset, motor van, and that's how you know it is the cost. That is it. So that's $6,000 for motor van. And 2 6s is what, 12? The 20% of 6,000 is going to be 1,200. And for the equipment, I wrote it. It's the same 20% that we're reducing it by, and it's 20% of the cost, just the same. And the cost of the equipment here is $8,000. and that's 2.8 is 16, so that's $1,600. All right, that's it for the depreciation. Next note is note E. I'm gonna highlight this so you guys can see it better. J. Graham has decided to start maintaining a provision for bad debts since there has been growing doubts about debt collection. This provision will be maintained at 10% of debtors. So he has decided to start doing it. That means he wasn't doing it before. So if you should look in your trial balance, you wouldn't see any provision for bad debts. You don't see provision for depreciation. Same thing as accumulated depreciation. It's not for the bad debt. Bad debt has to do with your debtors. There is no provision for bad debt because he wasn't doing it before. But now he realizes that, okay, seems there's a problem with debt collection. I need to create a provision for the amount of debt I am expecting not to collect. That is what your provision for bad debt is. You're anticipating that you won't collect some of the money that is owed to you by your customers. And in doing so, you create a provision, like a little cushion for it, because you're anticipating that, okay, I'm not going to get back $100. So you provide for it so that you can report your receivables at a more accurate amount. So you don't overstate your receivables. Prudence concept comes in right here, guys. Right? So if you're not expecting, so if you're owed $1,000 in total, and really and truly, honestly, I don't think I'm gonna get back $100 out of $1,000. It's only right for you to put it on your statements to show persons looking at your statements that in reality, even though you're owed $1,000, there's a possibility you may not get back $100. So really and truly, you're only expected to get back $900. That's what the provision is doing. Mind you, if we get it back, that's fine. I know we're gonna take it, but it's just in case we don't get it back and we are estimating or forecasting that we won't be able to get it back, we do a provision for it. So we do not overstate our receivables. So we're in adherence with the prudence concept. That's basically what it is. So the provision should be at 10% of debtors. So all we're going to do is go back to our trial balance. We find the debtors balance, which is $12,300, and we find 10% of that, and that is going to be a provision for doubtful debts, same thing as provision for bad debts. So 10% of 12,300, just take off 1 0, so that's going to be 1,230. And if your provision for bad debt is moving from nothing because you didn't have a provision before, and it is now going to be 1,230, it means that you're moving from nothing to something, right? From 0 to 1,230, which would indicate what? An increase in the provision, right? It only makes sense. Think of it like an increase because there was nothing before, it was 0 before, and now it's going to be 1,230. So that's an increase in your provision. And increases in your provision for bad debt is going to be treated under expenses. I'm going to repeat. Increases in provision for bad debt is treated as expenses in your income statement. Why? Because this is money you're anticipating that you will not be collecting. And therefore, somebody has to bear that cost. And who is going to bear it? It has to be you, the business. So that's why we treat it as an expense. Decrease now, reduction in provisions for bad debts, those are going to be treated as other income. When it decreases, other income, because a reduction simply means that, previously I thought I wasn't going to get back $100, but no, it reduced. I may only not get back 80. So the extra $20 that you're now expecting to collect, that's a good thing, right? So you can add it back as other income, something you're expecting to benefit from. And lastly, Included in the purchases figure is $1,500 for goods J. Graham withdrew from the business for his personal use. This should be from. Who is J. Graham, guys? Hello. J. Graham is the owner of the business. And if J. Graham, as the owner, withdrew goods for his personal use, what do we call it? It's drawings. What do we do with drawings? Drawings is not a business expense. Drawings is when the owner withdrew or withdraws resources. It can be cash resources or non-cash resources and not only money. There's a misconception that students have that drawings is just money that the owner take from the business or personal use. No. The owner can't take out the motor vehicle. Take out the business car, basically. Take away any of the business assets. Take away some inventory. That is going to be considered drawing. Once the owner is taking business resources, business assets, and taking it for his or her personal use, it is drawings. So if the owner take out some of the goods, let's say he owns a supermarket, take out some of the goods to go home, go make dinner, and he don't pay for it, that's drawings. Did he take cash from the business? No. He just took some goods, right? Yeah, drawings still. The goods were an asset to the business. This $1,500 is mixed up in purchases. They said included in the purchases figure is $1,500. That should really be drawings. Drawings should be disclosed separately. Drawing should be an item by itself. It shouldn't be in any purchases figure. So purchases have $1,500 for goods that were not purchased. It's for goods that were taken. I don't know how they recorded as purchases. If they recorded it as sales, that would make more sense. But it seems there was an error in their accounting, and they recorded it they recorded it as a purchase, which shouldn't be the case because it should be recorded as a drawings. So all you're going to do, you go to your purchases figure, and you're going to be subtracting the $1,500 from it. So the purchases here is 92,100. It's going to be adjusted because there's an error with this figure. 92,100 minus the $1,500. And that's it for our adjustments. So once you're through with your adjustments, you then go ahead now to prepare your statements, which should be a breeze. Because guess what? You did the hardest part already, right? Some may say no, but that's because you don't know your formats, guys. Let me give you an easy way to listen. When I was just learning this for the first time, I started accounts in grade 10. And I don't know, I loved it when I started it. Having never done it before, I didn't even know what was accounts. At the time, I don't even know what name. So I just started it and I really loved it. I had problems remembering my formats too. Because I'm like, okay, how am I going to remember this big trading profit and loss account thingy? Same thing as your income statement. All right, since the question, use the word income statement. Let me use the word income statement. It's the same thing though. And you know what I used to do? I used to sing it. Yeah, I used to sing it. Like I used to be like sales, let's return in net sales, and I gave it a little rhythm because I had the format, I had the layout in my book that my teacher gave me, and it just looked like this long thing. And I realized that all I need to remember is a trading account, just the top part, because the expense part, she just gave us expenses as examples. That doesn't mean those are the expenses that you'll always have. It's just an example, right? So once you know the trading account, and you know that after the gross profit, you would add any other income that you have and to get your adjusted gross profit. Or if you don't have any other income, that's fine. It just jumps straight into your expenses. And the expenses should be something that we can easily identify. Is it a cost to the business? So your teacher may give you some expenses, a list, but then if you work a question and say one new expense for the trial balance that your teacher didn't give you, you're not confused because you don't understand the concept of what an expense is. So that's why I said I don't teach you question, I teach you concept. You need to get the concept of an expense. An expense is a cost that is incurred by the business. For business purposes, by the way. Business purposes. And you can get a bunch of different expenses. What I learned in my time doing accounts is that there's, I don't know, the best thing to do for accounts, I know persons usually ask for like tips. The best thing to do is to practice. I know it may sound cliche and everybody's saying to practice, but you don't know how to practice. And when you're practicing, you don't know what to do. Yeah, trust me, I get it. I've been studying accounts for years now. I am still studying accounts at higher levels. So I get it. And the higher you go, the harder it gets. But that is the only way you will get it, through practice. You have to practice and you have to learn the principles. You have to know the concepts. You cannot SWAT. It's not a subject that you can SWAT. So don't try it. Don't try to SWAT it. Try to learn it. Try to understand it. And even with the trading account, I don't have my students SWAT it. I give them the shortcut formulas, or a different side to knowing it, rather than you having to SWAT it. I give you a way where you can understand it instead of you having to SWAT it. Once you understand how it works, you will remember it. You don't have to, try so hard to remember what should go where. And I know this is a problem for many students. So the first thing we start off with sales. You need to know that sales is the first thing we start off, that will never change. So go in your trial balance and you look for sales. Now, another advice I would give you guys is when you're practicing, and even for the exam, you can just quickly run through the trial balance, and write IS or BS beside the item so you can know what's balance sheet, what's income statement. So or you can use a tick mark for income statement and asterisk for balance, whatever the case is. But just a way for you to know when you're going to prepare the statement. No, you can just easily run through because you already know what should go where. I can easily look at it and do it now, but I don't expect it will be the same for you guys because you are learning it now. I have a long surpassed something like this, right? But for you guys, like for example, loan. What is a loan from P parking? A loan is a liability because we owe something. Liability go balance sheet. So say, all right, this one is balance sheet. Capital. Capital is investment by the owner into the business. Capital is definitely balance sheet. But in order for you to know how or where to put the stuffs or what should go where, you need to first know what should go in the income statement. Your income statement consists of income and expenses only. That's all. Income and expenses only. While your balance sheet consists of your capital, liabilities, and your assets. Everybody know the accounting equation, which you should. Assets equal capital plus liabilities, right? The accounting equation is also called the balance sheet equation. Simply because these are the three elements that you find in the balance sheet. And the balances, like the equation. So once you know that for the income statement, you only need to put income and expenses, you're on your way. So I'm gonna expect to see drawings and no income statement because drawings is not an expense. No, it is not. Drawings is drawings, and that's just it. Drawings is drawings. The owner taking business resources for personal use. It cannot be considered as an expense because it's not a business expense. The owner did not take the stuff for business use. Expenses refer to costs incurred by the business for business purposes. And drawings is not for business purposes. So if students are thinking that drawings is an expense, you know what's going to happen? You're going to put it in your income statement, and that's wrong. Wrong. Drawings is what we would have is an account that affects capital. So wherever you put capital, that's where you put drawings. You can think of it like that because drawings reduces capital. So drawings is balance sheet, cash at bank, cash in hand. Those are assets, balance sheet. You get where I'm going with this. So you guys can go through, pick out, and do that, and you know where to put the stuffs. Now, continuing with the income statement, you start off with your sales, same thing as your revenue. Sales, revenue. Sales is revenue. Here we have the sales, 130,900. Let me see if I have any returns. Okay, yes, so I have the return inward. So I'm going to put it in the in the middle column, since I have sales returns to do some adjustments. All right. All right. 130,900. We're going to less any sales returns. This is the same thing as returns inwards. Let me use the terminologies that the question have. Return inwards is 550. Simply means when a customer returns stuff to the business, we're going to use it to adjust the sales figure to get to our net sales. This is the first formula you need to know. How to arrive at net sales. It is sales minus your sales returns. Sales minus return inwards. All right. Please do not practice doing your questions on Excel. It's a writing exam you guys have, so please write in your book. All right, next is less. We're going to be subtracting cost of goods sold. Right? This is a heading. Okay, this looks too big. Less cost of goods sold. This is a heading. So everything after this now is going to show us how we're going to get cost of goods sold. So we start with our opening stock. Thing is, with cost of goods sold, the question will not give it to you. Most likely it will not. So you have to work it out. If the formula is simple, guys, to arrive at gross profit is literally sales minus cost of goods sold. That's what gives you your gross profit. But the problem is, you're just not gonna get the cost of goods sold. You're gonna have to work it out most of the times. So let's go. Opening stock, put that in the middle column. Let's find opening stock. Remember, the opening stock is the one that is inside the trial balance with this date here, right? That's 23.19. Right. Now, we're going to be finding our purchases because we're going to be adding up our purchases. So what we're really going to be working out here is our net purchases. Before we're going to further, let's work out our net purchases. So find the purchases figure, which is, where's purchases? 92,100. Remember that we are going to do an adjustment for the 1,500. See it here? Minus the 1,500. So I'm just putting the workings in the bracket so you can see. Oh, this one, 92,100 minus 1,500. All right. Well, let me put this in the first column since we have carriage inwards. Here we have carriage inwards, so we're going to be doing an adjustment to our purchases figure. We have carriage inwards and we have return outwards. So these two are used to adjust your purchases to get net purchases. So right now, the first thing we're working out. So that's why we put the opening stock in a little middle column by itself and to stay there. We'll soon get back to you. Now we're going to work out our net purchases because purchases have adjustments. So we're going to work out net purchases. So we're going to add purchases and carriage inwards together. Carriage inwards is given in the question, and that's this right here, $215. Okay, cool. And then now we're going to subtract return. This is a formula, you know, I'm not making this up. This is a formula. That's the concepts that we need to learn. Subtract return outwards. Here's return outwards. So basically, we're adjusting purchases, right? Because you buy some goods, purchases. That's the cost of whatever what was incurred to buy the goods. You had to pay for the goods to be delivered to you. That's your carriage inwards cost. You have to include that as well in your cost. You have to add that. But then you return some to your supplier. If you return the goods, you don't have them anymore, right? So you have to subtract whatever you return to your supplier. And that's how it makes sense, guys. Find a way to figure out how it makes sense. Because trust me, accounts is one area where everything just makes sense. I don't know, but it just makes sense. I don't know who came up with this accounts thing, but it makes so much sense. If it's not making sense to you, then something is wrong somewhere. There's a disconnect somewhere because it should make sense. So once you can find how it makes sense, right? So this 90,000 is all net purchases. Net, the word net in account simply means that a figure has been adjusted. So you have net sales. Net sales is your sales figure after you adjusted it. After you adjust the gross sales figure, you get net sales. Net purchases is after you adjust your gross purchases figure. You get net purchases. Now that you have your net purchases, you're going to be adding it to your opening stock. So you put the net purchases figure in the middle as well. Add that to your opening stock. And this figure is what we call cost of goods available. What do you spell available? For resale. Let's see how this makes sense. Opening stock is what you started with. You started the financial year with this. Your purchases, net purchases after you adjust for movements, right, is what you buy. So you start with 23,000 worth of goods. You buy 90,000 worth, 90,000 worth of goods. It only makes sense that you have 114 available to sell. Let's say you start the year with 20. Throughout the year, you buy 50. How much you have overall to sell? Number 70, 20 plus 50. So that's the concept. Opening stock plus net purchases will give you cost of goods available for resale. And how do you get net purchases? So your purchases plus your carriage inwards minus the returns outwards. I'm going to put some at the end of the script. Completing this question, I'm going to put shortcut formula on the screen for you guys. So once you get a cost of goods available for resale, your next step is to know, let's think about it. We're trying to get cost of goods sold, You know what was available to sell during the year. You also know what you did not get to sell. So you have 114 available throughout the year to sell. But let's subtract our closing stock now. You did not get to sell. Of the 114 that you had available to sell, you did not get to sell 27. Remember, your closing stock is in the notes. Minus 27, 475. So available, you had 114 available to sell. But you never get to sell 27. So how much did you actually sell? 86. That's your cost of goods sold. And this is why I tell you guys, it'll totally make sense. If you can break it apart and find how it makes sense, it does make sense. Because if I have 114 available in my inventory or my overall, that's what I have available that I can sell. I did not get to sell 27. Then that means I must have sold only 86. Cost of goods sold. All right. And of course, remember that we are going to be subtracting cost of goods sold from our net sales so we can get our gross profits. Yeah, Whitney, you make it look so easy. It's not that bad, guys. Sometimes it's because we have a disconnect between the principles and the concepts. But you can do it. I know you can. And sometimes you may need to practice a little more than somebody else, and that's totally fine. You have to find what works for you. Everybody is different. So if somebody, your friend, is doing a study technique and you try it and it doesn't work for you, it just doesn't work for you. You find what works for you. Oh, I don't think you guys are seeing this because I'm who did that? Oh my god. Unfreeze. Hold on. I wasn't even realizing on the crosswords. Okay, good. All right. So now that we're at the gross profit, we are going to search our trial balance to see if we have any other forms of income. Because if we have any other form of income, we're going to add it here. So usually we add any other income that we may have, like discounts received, the commission received, any reduction in the provision for bad debts. You add them here to the gross profit figure to get your adjusted gross profit figure. In scanning through here, not seeing where we have any other income items to add. So we're going to jump right into subtracting our expenses. let's go through them one by one. So it's important to note you already have return inwards up here. You already have carried inwards up here and you have return outwards here. Nobody put them back as no expense. No, they're where they're supposed to be already. However, carriage outwards is an expense. That's a cost that you know as the business owner has to incur for you to do your deliveries or your shipments to your customers when you are the one paying for that cost or when you're the one covering that cost. So carriage outwards, we have 309 for that. Let me go in order here. You have motor expenses. Because I'm lazy, I'm just gonna copy and paste. Our motor expenses is 1630. We have rents and rates. Remember that we adjusted rents and rates, but because we went through the adjustments before, life is so easy. Look at this. Try to always show your little workings like this as well. All right, let me put it out. You can put your workings like I was just doing it in the brackets right here. You can do that like that, or let me just do an extended version of it. So rents and rates, so make it so you guys can see the breakout. Less prepaid rates. Rates had a prepayment. Was it the rates that was prepaid? Yeah, of 405. So rents and rates, the original figure that we got here is 2,970. So let me put it in the first column here because I'm going to be doing some sub adjustments. Oh, how the columns work? Your first column is like when you need to do some sub adjustments, right? Your middle column is when you probably have like a bunch of figures and you're going to add them after. So like adjustments. And your end column is for your finals, your total. End column, total, final totals. Middle column, some adjustments or some figures that you're going to have multiple figures to add or subtract later. And if you need to do further sub adjustments, you have a little third inside column here that we insert sometimes. 2970. We don't have any transposition error. So prepaid rates minus 405. And we're going to be adding our rent owing. Rent owing, the rent owed is how much again? $300. So this is me just showing you a breakout. As I said, you could just put the calculations in bracket too, but I like this way because it shows the breakout. So the examiner can see what is what, in case you should go wrong somewhere. And that's the beauty about accounting, guys. You can pick up marks. You don't need to be 100% correct. You can pick up marks. You don't need to balance your balance sheet. You're not going to get everything wrong if it's not balanced. You can pick up marks. Just follow the principles, please. The concepts, the principles is what govern the rules of accounts, right? There's the rules that govern accounts. All right, so that's done. The next one that we have is the telephone charges, which also, as we highlighted earlier, will require some form of adjustment. And for this one, we're adding the owings, right? So the original telephone charges in the trial balance is 405. We're adding some amount owed, which is 85. So there we go. Then we have our wages, which we didn't adjust anything for that. So we just put down the wages figure, which is 12,810. We also have insurance, which we adjusted based on, see, making life so easy. All we just said, do I go through? Insurance was 492. We adjusted it. There was a prepayment, so we list the prepayment. So we're minusing, subtracting that 105. We literally already did all of this, you know. So we're just like going through right now. Literally. And just put in the figures where they should go. Office expenses. Some of these expenses are obvious that they're expenses. No, it's not always a case where the expenses will be at the bottom like this. We just got lucky with this question. Sometimes the stuffs are all over the place in the trial balance. Sometimes the trial balance may be a bit more organized. But ultimately, it's your responsibility to know what's an expense, to know how to identify the stuffs and know what should go where. And we have our sundry expenses, just 284. And some persons may be like, oh yeah, we're finished now. No, we're not. Remember our notes, we had depreciation, and depreciation is an expense, my darlings. So depreciation, please specify. Don't just group them up together. Depreciation, motor van. Specify them, right? Let me just put the workings in brackets real quick. So, if you should, guys, I'm going to say this, and you'll get tired of me saying it. When it comes on to account, you need to show workings. When it comes on to any numerical subject, any working out, any calculation, show your workings. Because guess what? If you should have an error, as a transposition error, you leave off a 0, you leave off the last digit or whatever, if you should have an error and the answer is wrong, the examiner can look at your workings and say, oh, the working was correct. Maybe something just went wrong and she write the wrong figure here. You get me? So show your workings, please. Don't just put figures on papers. Your workings assist you in getting marks. Learn that from early. The only time workings don't matter is in multiple choice because nobody's seen your workings. But when you have a structured paper, I don't care what subject it is, please make a habit of showing your workings. Nobody can guess what it is that you did. So for example, let's say I accidentally wrote 120 here. I can still pick up marks because the examiner look at my paper and say, oh, watch out, there's a correct working, but seems she just left off a 0 by mistake. And you can still get marks. So always show your workings. Office equipment. And again, it is 20% off. This one was 8,000. And because we already did this, it's a breeze just filling out the statement right now. You don't have to stop and think about anything. I already did all the thinking earlier. Such a breeze. So refreshing. And we're not finished because remember, we also had the provision. And remember, I said earlier, an increase in provision is going to be treated as an expense. Was moving from nothing to something, so from 0 to 1230, so it is an expense. So it's an increase and it's an expense. Increase in provision for bad debts. Then I put the workings in brackets as well. 10% times, was it 12,300? Mm-hmm. Right. That's us. So if we're comfortable that we have all our expenses, the next step is for us to go and sum all of those expenses. So we're going to add them up. Please, I beg you, practice with your calculator that you'll be using in the exam. Do not practice with any phone, any laptop, any tablet in terms of the calculator. Use the calculator that you'll be using in your exam. So you're familiarized with your calculator. Trust me, that makes it's a big deal. I can use my calculator without looking at the keys. I can just press and know everything is. I've had a calculator since I was in like grade 8. Yeah, it's a very good calculator. But the point is, practice your calculators and don't try to play hero. And yeah, we know you're bright, but don't try to play hero. Why are you trying to work out this thing in your head when you have a calculator, especially in the exam? Why are you trying to do that? Don't play hero. All right. Now we're at the last stage. So after we total our expenses, let me make sure you guys are seeing. All right. After you total your expenses, it gets so much easier. All you're doing, the gross profit that you have, or if you had adjusted it to it, an adjusted gross profit, but your gross profit here, realize how the figures line up. This is why the presentation is very important, because you see, oh, my figures are lined up. So I know that, all right, at the bottom now, when I have this total expenses, it's a final total. So I put it in the last column. It lines up with this 43. So I know that, oh, this may subtract from. So the total expenses of 24,000, we're going to subtract it from the gross profit of 43,000 to get your net profit or your net loss. In this case, it's a profit. A loss would be a negative figure. This case though, our gross profits is more than the expenses. So we result in a net profit of $19,225. And of course, we do our double underline because that's our final figure, and we're finished. And this is it. I know it seems so easy. Yeah, Whitney made it sound so easy. It's again, it's a practice. It can seem easy for you too. It can become easy for you too. Again, it is the practice that will make it easy. You guys have a few weeks before your exam. Do not take them for granted. Now is the time that you should be doing the work. Do not wait until a week before the exam. Don't wait until a couple of days or the night before the exam. Now is the time that you should be seeking help. Now is the time that you should be putting in all the work and practicing. I remember when I was doing CSEC, like my entire Easter holiday was practicing. Yeah. I had to sacrifice some stuff. I had to give up the social media. I had to just lock in. I had to be boring until after my exams because I had a goal. I know what I wanted. And I know that for me to achieve what I want, I would have to make some sacrifices and I would have to do what I need to do. So it may sound weird when I say learn how you learn. Everybody is different. How your friend learns, how you learn may be different. Just learn how you learn, figure out what works for you. And it's okay if you approach different subjects with different approaches because, yes, that would be needed. That's necessary. Sometimes you have to approach different topics in different ways as well because it's not the same. Some topics are more theoretical, some are more numerical, whatever the case is. Just find what works for you and hold yourself accountable. Yeah, we're not big people, like hold yourself accountable. You guys are old enough to be responsible. So if you're not doing enough, then really it's your fault. You're not doing enough. Find resources, watch some videos. We offer one-on-one classes, guys. Like literally, a one-on-one class is literally the best thing for our students. When we have group sessions, our students are like, I don't want to join a group class. I want to do one-on-one. And because of that, we don't have group classes right now, to be very honest. It's all one-on-one. So our students come to us, they want one-on-one because we focus literally on just them. You will learn at your own pace. Your tutor works with you right throughout. And it's literally the experience that you get is curated to your personal everything, how you learn, all of that. So it's really about you 100%. So if you guys want to sign up for our one-on-one sessions, you can shoot us a message. I don't even know where our contact info, but can message us on WhatsApp at 876-783-7399. We're on Instagram with tutoring. Please subscribe to our YouTube channel. We will pop in every now and then when we get a chance, and we can do some lives like this and work some questions. But at least when it's live, you have the option or the opportunity to be able to ask questions in the chat because it will save to YouTube and you can watch it back later. Yeah. But when it is live and if you can hop on while it's live, then you can get to ask questions while the session is ongoing. So subscribe to our channel, turn on the notification so you can be notified whenever we go live. Oh, I said I was going to show you something at the end. Let me find it. All right, this is what I wanted to show you. Oh, it takes that formula. But this is what I want to show you, the formula or the formulae. So you can just take this down. It's the shortcut version. It's what I basically just went through when I did the income statement, the TPNL. Yeah, so this is it. But anyways, yes, guys, should you require further assistance, you know where to find us. We leave our contact information and our socials in the description so you guys can reach out for further information. If you're not already a part of our WhatsApp community, you can join our WhatsApp community. We leave the link in the description as well. Although I think it's gonna get in full very fast, so it may soon be full, but you can journal. You still have the opportunity to do so. All right, and that is it for today's lesson. Until next time, have yourself a wonderful day. Practice, 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 and do what you need to do to ensure that you achieve your goals this exam season. All the best on your exam. Trust in your abilities, trust in yourself, and yeah, you got this. Bye, guys.